Let's break down today's US market action by walking through the major indexes, key risk indicators, and pre-market sentiment. We'll cover the S&P 500, Nasdaq, small caps, a high volatility stock, and the VIX, plus what the pre-market heat map is telling us right now. As always, this is for educational purposes only and not financial advice. SPY S&P 500 structure. Overspeed. The S&P 500 continues to show a controlled and methodical price structure. Rather than pushing aggressively in either direction, the market appears to be digesting recent moves. Buyers are stepping in at key levels, but there's no sign of panic or euphoria. This kind of environment often favors patience over prediction. When ES moves like this, it's usually building energy rather than breaking down. Until we see expansion in volume or a clear directional push, this remains a market that rewards discipline and selective entries. NQ, QQQ, Nasdaq, sensitive to volatility. The Nasdaq remains the most reactive index on the board. Tech stocks continue to respond sharply to changes in rates, sentiment, and volatility. While there is underlying strength, follow-through has been inconsistent. This tells us that institutions are still involved, but they're being selective. Instead of broad-based buying, we're seeing rotation within the sector. In environments like this, chasing momentum can be costly. Confirmation matters more than speed. RTY/IWM, small caps, risk appetite check. Small caps remain a key tell for overall market confidence. RTY is still lagging the larger indexes, which suggests risk appetite is present, but not fully committed. When small caps lead, it usually signals broad economic confidence. When they lag, it often means capital is staying defensive. For now, RTY's behavior supports the idea that traders should remain tactical rather than aggressive. HUT, high beta, high risk. HUT continues to trade as a high beta, high volatility name. Stocks like this tend to exaggerate market moves, both up and down. When sentiment improves, they can move fast. When conditions tighten, they can pull back just as quickly. This is not an environment for oversized positions. If you're involved in names like HUT, position sizing and risk management are far more important than trying to catch every move. VIX, the market's mood ring. The VIX remains one of the most important indicators to watch today. Ideally, we want to see volatility clear its current range and move into a clear skies zone. That would suggest improving risk conditions and give equities more room to trend. For now, volatility hasn't fully resolved. That means uncertainty is still in play. Until the VIX clearly breaks lower, the smart approach is simple: size positions properly, stay patient, don't risk it for the biscuit. Pre-market heat map, mixed signals. The pre-market heat map is showing a mixed picture. There's no clear dominance from bulls or bears, which aligns with what we're seeing across the indexes. This kind of setup often leads to choppy sessions where overtrading becomes the real risk. In these conditions, waiting for clean setups and letting the market come to you is usually the smarter move. Final thoughts. Right now, the market is asking for discipline, patience, and risk awareness. This isn't about being early. It's about being right. Let volatility settle, let levels confirm, and don't force trades that aren't there. If you found this breakdown helpful, make sure to stick around for updates as the session unfolds.